So let's dive in. So Diego had a wish list.
Just would like to learn a little more about the real with the making of real strategies such as short squeeze, for example, or could be the cat bounce or whatever. So we will be learning about, for example, in the case of short squeeze, how to identify the stocks with high short float, or in the other case, we will identify a candidate with earnings in the day. So this is just an idea.
Okay. Mm-hmm. Well, I mean, we have, Volker, I don't know if you have the data extensions installed, do you?
No, I don't have the, you know, I like to keep it pretty without extensions because I think it's faster then, but, and I don't need most of the extensions, so I can install them next time. What were you suggesting, Dion? Which extension?
Well, I mean, to look at something like high short interest, we, in the data extensions extension, we do have a dynamic data set that gives you stocks with a high short interest, or to look at the short interest fundamental data, we would probably need the fundamental extension.
Just one thing from my experience, you know, these kind of data, you know, the most important thing is that the data is clean. And I'm not sure which markets you are looking at, Diego. Is it the US market or the Brazilian? Or, I assume you're from Brazil, is that right?
No, I am from Argentina and close to Brazil. I am using US stocks mostly.
Yeah, because the quality of the data is very important, and the more, you know, first of all, the closer the time frame gets, the more not so good, let's put it this way, does the data become. And it's already very difficult to get good end of day data because most data providers don't care, inclusive Bloomberg. And if you use fundamental data or some other data, then it has to be clean too. And you have to make sure that you actually do get them at the right time, because some of this data is delayed for a couple of days because they don't have the data available today. They only know tomorrow or day after tomorrow what happened today. So before using this data, you have to make sure that you know what kind of data you are using. That's very important, but I will install it next time and play around a bit with it and see what we can do. So basically what you're trying to do is you want to buy stocks that dropped a lot and come back, and you want to use some fundamental data to give you a bit more comfort. Is that what you're saying?
Yeah. And this is just a part of these strategies, because there is more than fundamental data. As an example, in the short squeeze, it's good to know the short interest, but there is more. I will start like looking for lower during last 3 candles or more, and that are suddenly rising.
Okay. Yeah, I mean, all these these simple things, or, you know, purely based on price, whether it's a moving average or just the price, that is something that I'm very familiar to work with. But the short squeeze and all these other fundamentals I'm not so familiar with. So I prepare that for next time. Dion, you look like you have an idea.
Well, I was just wondering, are you sharing your only WealthLab or are you sharing your whole screen?
No, I only share WealthLab right now. Why? What do you want me to share? I mean, I can change that.
I'm seeing a black screen now, Volker.
Oh yeah, because I don't have
Okay.
something
Cool.
opened. Now you see the spy, right?
Yeah.
Good. Is that why you were asking, Dion? Because you only saw.
No, I was just saying maybe we could actually go through the steps of, how do we install the extension, and I'm looking at our different event providers now to see which one has short interest, and it looks like our NASDAQ provider has short interest.
Okay.
So yeah, it could be, interesting to, pull that in and take a look.
Yeah, I'll do that. Give me a second. I will. No, maybe I have to stop sharing for a second. Okay, I'm now sharing. Now sharing the whole screen.
Yeah,
So
that's fine.
I minimize this one.
And yeah, sorry, Super Ticker, it's even smaller now.
Is it?
But yeah, let's just maybe go to the WealthLab website and click extensions.
Oh yeah,
And let's.
I can actually make it so that you only see this screen. Maybe that helps.
Oh, this is okay. We'll just get up and running, and then we can go back to the sharing WealthLab. But let's scroll down and let's select maybe fundamental. Just it's yeah, right there. Let's click that one. I want to make sure that this NASDAQ provider is in there. Let's see. We'll install our data extensions extension.
Yeah, you can see I always press next, and now I press install. And
okay, so it's installed. So then you'll need to restart WealthLab 8 to get that extension to show up.
yep. Now I go back to just displaying WealthLab. So 1 second. I go to this famous Windows 16.9 because because a lot of people have this ratio here.
Volker, I just remember I was having another doubt. It is when to use multi-condition.
Yeah, we can multi-condition in the building blocks. We can talk about that, but let's finish up this thread first on this fundamental information, and then we can get to the multi-condition. So Volker, can you go to the data manager?
Yep.
So in the data manager here, in the tab event providers.
Yep.
So these event providers are the things that can bring in any kind of sporadic data into your workflow, like things like fundamental information, patterns, anything that isn't like a price series, but things that can be associated with different dates on the price series. So here Volker selected the NASDAQ fundamental provider, which gives you short interest and dividends. So if you open up a chart and maybe type in a NASDAQ stock, you should...
you not have to update it first?
No, you don't.
Okay.
So just
So I
open up a chart and, you know, like type in the stock for, you know, some NASDAQ symbol. We should see some other little events on there. There we go. We see some S's and we see some D's. So the S's are the reported short interest, and then the D's will be dividends. So that's one way of looking at the short interest. You know, we can see when this event provider is bringing it into the chart, but we also have some indicators that let you also work with it in an easier way, kind of. So if you go to your fundamental there, why don't you drag that in?
just
Yeah.
the fundamental,
Yeah, fundamental
I-
indicator.
and then the short
Select
interest.
short interest. And yeah,
Yeah.
that's fine. Just click OK. So here we can see on the chart now, we can see, you know, the short interest plotted as an indicator. So let's see. It looks like it goes back to 2021. So
what exactly is short interest? Is this an indication of the volume of short positions that are being purchased?
my understanding is that it's the volume of shares that are being that were borrowed and held short. So when somebody shorts a stock, they have to borrow the shares from the broker. So then this is the total number of shares that are borrowed in that way and held in short positions. So,
yeah, it's you know, a lot of times, I mean, you can see, I mean, every time, you know, I wonder why they report it periodically and not like constant every day.
well, yeah, I'm sure this is coming from Nasdaq.com. I mean, they probably looks like they report it monthly, so you know, or maybe a couple times a month in some cases.
Yeah, they have bi-weekly. It seems like, see here it is the 15th, and then the next one is on the
Yeah.
the 30th, and then the next one is again on the 15th, and then end of month. So it seems to be like a bi-weekly report. I don't know, Diego, if you're familiar with it. Are there others who have like a daily update or something? And I wouldn't know how people would actually, how actually anyone would gather that information, because there might be a million people short at Interactive Brokers, but none at TD Ameritrade or Fidelity or whatever. So I have no idea how they come up with this number, but I'm sure that the brokers have to report it at one point. So, and it might be, you know, I'm not sure, you know, anyone can try to find out whether.
Yeah, I think it's the brokers have to report on a monthly basis. Or
okay.
quarterly basis.
Quarterly basis. So.
Yeah, which was one of the issues why, you know, Interactive Brokers and Robinhood and so on almost went belly up, right? During the
okay.
during the speculation, right, of big short squeezes.
Mm-hmm.
Yeah.
Hey, Volker, why don't you type in GME?
Yeah.
Okay, so we're not getting any here. So, is GME a NASDAQ stock? Maybe a nice. Yeah, so this provider is coming from NASDAQ, so it'll only give us info on NASDAQ stocks.
Try the other one. What's the
AMC?
AMC, yeah, the cinemas.
It's this one here.
No, just AMC.
Okay. It doesn't give me AM. Just
it's
AMC.
Because you haven't loaded it yet. Just hit enter. There you go. But yeah, it looks like we're not getting it either for that. That's a shame.
it might be for the smallest, and I have no idea. No idea. I'm sure people can. I mean, I'm sure people can figure out something.
Well, I mean, the point though is that if we can find a source for a different source of this short interest information from anywhere, WealthLab is flexible enough where we could build another event provider and then pull that in, then it'll be available. So this one it's coming from NASDAQ. I mean, potentially we could find another source that has a wider coverage, and then we would be able to build a interface and create an event provider for that. So it's kind of showing the open-endedness of the platform in a way.
And you can actually use it. I don't know. You can use it in drag and drop the fundamentals. So you can use it in drag and drop and say if the short interest does this, whatever.
Yeah. Since it's an indicator, you could use it wherever you can use indicators in a building block strategy, as a rotation, weight, anything basically.
Yep. So, I mean, that's the beauty. I don't know, Diego, whether you're a programmer or a drag and dropper, but so once the data is there, then you can use it in drag and drop, and obviously the programmers can use it in.
Yeah, but it would be also interesting to create an indicator which is related to the float. As I can see, it shows us the number of shares borrowed for shorting. But it would be interesting to know the percent of short interest depend of the total float.
Oh, we can do that. Yeah, let's we might need the other extension for that though. We might need the fundamental extension because the fundamental extension can give us the number of shares or the total shares outstanding. Let's see which one does that. I'm going through my fundamental items here. Let's see. So the Y charts provider has shares outstanding. Anyone else? Let's see here.
IQ feed also give you shares outstanding for the most recent quarter.
Right,
and that's the one I actually use.
But we want it historical.
Oh, I see. You need a time series of shares outstanding.
And Morningstar has shares. So Volker, if you want to install one other extension, we can do this. It could be a
fundamental.
Yeah,
fundamental one.
Mm-hmm.
Okay, I'm already on it.
So you'll notice we have another indicator there, fundamental ratio. That lets you create a ratio of two fundamental items, so we can, divide the short interest by the number of shares and kind of get that value.
So you don't see it, but in the background, I'm actually installing that fundamental.
Mm-hmm.
And that's the amazing thing about it. You get all this information, and you can get all this information, and you can use it. And that's just like, I find that always amazing. And the data is usually just as good as you can get it from Bloomberg. So they all come from one source, obviously.
I mean, so, I would have liked to seen a longer history for it, but that looks like that's all that they provide.
Well, there might be ways to get it. So let me see what happened here. I installed it and have to restart.
You have to reboot. Yeah, you have to restart WealthLab 8.
Yeah. I restart again. So now you see me a little bit clearer.
Hey, whilst you're restarting, Volker, do we get a chance to get into the topic that I sent today? Or
what was the topic?
The topic was how to perfect or improve the equity curve. So, in other words, the smart people like you guys, what's the experience that on indicators, smootheners, etc., that help improving the slope?
Mm-hmm.
It's a generic topic, right? Because I think that would be of interest to many.
Let's get into that. Let's make that, let's finish up kind of quickly showing this fundamental ratio, and then we can get into the equity curve a little bit, and then Diego, we can then kind of show you this multi-condition group that you were asking about. So we can cover all these things definitely.
Cool.
Oh, and I'm sharing again, and yeah, I have it set up so that it always runs all the strategies. So
yep.
Good. You see my screen again?
So we'll need to go to the data manager again. And let's go back to our event providers. You should have a bunch more now. Look at all those. Yeah. All beautiful different colored icons. So should we use Y charts or should we use Morningstar? So
I think Y chart we have a good range of fundamentals.
Okay, then you should check off shares outstanding.
Shares outstanding here. And free cash flow? No, we don't need that. Shares outstanding?
Yeah, that's all we need for this purpose.
Let me see, is there anything else that total load?
We can open up a chart and see if it's pulling it in. So do you guys see my WealthLab screen now?
Yes, your letters are way too big.
Are they?
Really, really big on my screen. But it's okay.
Well, yeah. It'll be good for Super Ticker.
Can you see better now?
I love it.
See, okay, I tell you, it's my monitor. I'm sorry for that. Got this modern monitor, 4K.
So here we have shares outstanding from Y charts, and we have short interest. So let's see if we can do this. Let's go to our indicators and go to our fundamental indicator. In case you don't know, you could always use this filter to kind of zero in on the indicators you're looking for, so that'll filter now by fund. So let me drop over, well, first of all, let me drop over the individual ones. So I'll pull in, I've got too many choices here. I think I have an event provider maybe turned on that I don't need. Yeah, let me unselect all of those. And now this should be cleaned up a little bit. So we've got short interest plotted. We've got shares outstanding. We'll change the color. So we've got that plotted. Let's change the pane that's plotted in. Shares outstanding. So now they're plotted in two different panes. So now let's create a new ratio indicator. So we're going to say the numerator is shares outstanding, and the denominator is, or no, the numerator would be short interest, and the denominator would be shares outstanding, right?
Yeah.
And we can multiply it by something. Let's say 100. And there's some kind of summation things here that let you kind of sum up the quarterly items. Let's leave it at the default and kind of see what happens here. All right, so here we kind of have a quarterly ratio now of the short interest over the shares outstanding. So there you go. It's plotted there with one indicator. So we can now see, is the short interest declining for this stock? It looks like it is. So pretty interesting that we were able to do that with one indicator, I think.
Can you try GME or AMC?
Yeah, we weren't getting any short interest for those, if you remember. So
you're using different providers, no?
Well, not for short interest. We're still using NASDAQ for short interest. That's kind of the only one that we have that gives us short interest. So yeah, we're not getting any. But we can
Try
pull
Tesla.
Can pull in like other NASDAQ stocks.
Try Tesla.
Okay. So here's Apple. So the short interest for Apple is kind of ticking up.
But is that a ratio or?
This is a ratio, yeah.
How can it be 600,000? I mean, it doesn't make sense.
Well, let's see. We've got short interest here. Probably because the shares outstanding value here should be multiplied by probably some value like 1,000. It's probably, obviously Apple has more than 16.
I think the ratio should give a percentage, which is something between 0 and 100, right?
Yeah, I mean, the way that this provider, and it's is this Morningstar? Or no, this is YCharts. So it looks like the way YCharts is giving this information is probably maybe in millions. So, or probably, what do you think, thousands? So how many?
Thousands, maybe.
So there's some. So how many shares outstanding is there of Apple? Can somebody quickly check that? So yeah, so the shares outstanding is actually 16.8 billion. So according to this website, Macro Trends, that I'm looking at.
Yeah.
Okay, so this should be multiplied by 1,000 then?
No.
So, or what? How do we turn 16,000 into 16 billion?
That's I don't know, at least 100,000. I would say
160.
100,000, 1 million.
16, 160.
No, multiplied times a million.
Yeah. Okay. Yeah. So this is actually should be multiplied by 1 million to get. So
if you divide the whole thing by 1 million, right, then you're in 0.65, right?
Right. Yeah, but yeah, you'll see that these different event providers kind of return the data in different ways. So you do have to cope with that. So you have to know what units they're returning the information in, and kind of make the adjustments you need. But we could still see the by the slope of it, and kind of by how it's acting, whether it's going up or down. And yeah, I mean, with the proper knowledge of what units this is, we could then actually create the correct number down here. But yeah, it's pretty cool. Good idea.
It is really cool. It
Interesting to see
gives
that.
Diego exactly what he's looking for.
Yeah, because I think that in order to do a short squeeze strategy, we'll need a series of indicators, and one of the indicators can be and these indicators should be normalized. So just the number of short interest, it doesn't matter. What matters is the percent of short interest over total
Right.
votes or shares outstanding. So this way we will create an indicator that that we can use to identify possible candidates for the short squeeze, which would be stocks with the high short interest, and all stocks must be compared, so it should be percent. And,
So yeah, maybe for the next time we get together, in the meantime, I can kind of put this together into a single indicator, to kind of show that. What do you think, Volker?
Yep, sounds interesting. I still would like to see Tesla, but just for the fun of it.
Here we go, Tesla.
Yeah, because they were always talking about short squeezes, and it definitely needs to be sort of get a needs to be standardized.
It could be it could be in a July time period, right, Volker, where there was a lot of July 21, a lot of talk about short squeeze, etc.
Yeah, it's just well, and keep in mind, I think you do get the data delayed. That's my feeling. Data that you get every 2 weeks could be delayed. And
yes, it is delayed.
Yeah.
Hey, Dion, if you're going to work on this short indicator that Diego was suggesting as there is actually a metric that is widely used for timing short squeezes, like Diego was trying to do, and it's not the percentage. It's the Diego. You must have read about it. It's the days to cover. So if you read about it, Dion, you'll see it. It's basically, given the float and the daily volume, how many days would it take to cover all the short? And that's the metric that basically gets you to the hit point for a potential short squeeze. When that gets, so that could be very valuable to the community.
Yeah, I'll create a days to cover indicator. But for now, I'm going to stop sharing and give it back to Volker.
Okay, where am I now?
So yeah, that'll be interesting for next time. Let me try to put that together. But let's try to now cover the other couple things that people wanted to see, like the maybe some talk about the equity curve, and then a quick hit on the multi-condition group.
Okay, so we start with the equity curve, yeah?
Yeah.
And I'm,
I guess it depends on, like for the equity curve, do you have like a baseline system in mind? There's so many different kinds of trading systems, and what would improve the equity curve for a trend following system would be different than for a dip buying system, so I think it's really dependent on the type of system that you're running, right?
Yep.
So I think that is exactly the question. How do you, yes, every type of, system may have different characteristics, right? And therefore, equity curves by nature will not be smooth necessarily. However, by the time you optimize and you start picking, what works best, etc., you get to a better place, right? Not perfect. So the specific question is, let's say you take the RSI2, right, as an example, run it against the SPY, get an equity curve. And then you say, okay, how do you finish, or what else can you do to smoothen it?
So yeah, let me just quickly show something that kind of goes along with what we were talking about smoothing the equity curve. So one thing that worked good for me is running a number of different strategies. So I have this meta strategy. So it's running 4 strategies, and one is the deterministic knife juggler. That's on Wealth Signals. This one actually is also on Wealth Signals, but it's a different name. And then I have Triple Threat, which is also on Wealth Signals. And there, that's much quicker. See how much faster that is? Because it's not trying to update all of these fundamental items for all of those symbols. So that's one thing to kind of keep an eye on. If you see your updates starting to bog down, look at your event providers and maybe turn off the ones that you don't need. So I now have all of these strategies, run in one meta strategy. So see how nice and smooth this equity curve is. If I look at my individual profit curves, they're, they have, can be quite jagged in some parts, but altogether, it kind of like nicely smooths them out. So, I mean, that's one thing that I like to do is create a meta strategy that, brings different strategies together. And I found that can smooth the equity curve.
And you can see that you can actually increase your position size a little bit.
Yeah. Mm-hmm.
It's I know that you usually like to take bigger percentage position size. So yeah, I think that was a great example of how to smooth the equity curve without going into maybe optimizing the equity curve, where you can put an indicator over the equity curve or something like this. So I think that was a great example of, what can I do? How could I do it to smooth the equity curve? And
well,
and
Michael, do you have any ideas that you wanted to kind of run through about how to smooth the equity curve? I mean, we can.
Yeah, frankly, I don't have any better ideas than what you're. I mean, I do use meta strategies, and I know that by diversifying, a bunch of strategies, obviously you are reducing risk and you're smoothing, right? So, however, so one curiosity here is, do you actually check on the correlation between the strategies when you select them to make sure, they're not overly correlated?
I don't have any
diversification.
I mean, I kind of eyeball it, and by looking at the profit curves, that each strategy you can see in that visualizer has its own profit curve. So, I mean, I could see visually that, that there was some good uncorrelated, lines there. I mean, I didn't go and look at the number and, do a strict analysis of it. I more kind of just eyeballed it. But yeah, it's important to do that.
Yeah. When I raised the question, my thinking was more going in the direction of Volker. I mean, what kind of indicator would you add, to sort of create that smoothing effect?
Well, from my experience, and you probably have, I think if you start working on the equity, you just put another layer of another kind of an optimization on it. And, I would rather try to add another. I mean, if I would see an equity curve like what I just saw on Dion's meta strategy, I would probably think this is not true. I would probably think this is too good. I would think of this one company that had this straight line up. But I mean, I know that it is the equity curve of all the equity curves. But so what would I don't know. I probably wouldn't touch the equity curve. I would probably it is as it is. That's what I think. If it's too volatile for you, either decrease the position size, or use a filter like we had last time. I think you were there with the analyze series, or don't use it. That's what I would do, because the one thing that I found out, I mean, it's use the clean data, the best data you can get, and and try to test as long as you can, or with as much data as you can, and there will always, and the market will be a little bit different than it was the last 20 years. So even if you optimize or run an indicator on your equity curve, it'll be going, it will not improve it. But Dion is doing something. Yeah.
Yeah, I'm just putting together a quick
you're running
a quick strategy,
yeah.
to kind of talk about this multi-condition group. So
okay.
I have an entry that will buy when the price goes down 4 days in a row. So let's put in an exit.
Make it after 2 days, which I usually like. Okay, do this.
So to sell when the price goes up 2 or more days in a row. So give me a symbol.
Use the SPY.
Sorry, SPY.
Use the SPY.
And let's change our
Can you
position
also
size.
can you comment on preference of, for backtesting purposes, whether to use fixed amount or percentage of equity? What's your own experience?
I typically use percent of equity because, I mean, unless it's my one that I'm trading. If it's one that I'm trading, then I use fixed because I know what position size I want to put in, on any trade. But if it's back testing, then I always use percent of equity. So for now, since I'm testing on one symbol, I want every trade to basically take all of the capital. So I set it to 100.
Oh, if I use equity-based advanced positioning, like based on drawdown, so it does it take account the standard deviation or like the each different stock variation in order to set position sizing according to each individual stock's risk.
So do you mean these advanced position sizers here?
Yeah.
I mean, everyone is coded differently. So, I mean, maybe if there's a specific one you're interested in, maybe we can either talk about it next time because we're kind of running out of time here, or maybe mention it on the forum and we can, yeah. But for now, I'm going to go with percent of equity 100 because I want every trade to basically take up all the equity since I'm testing just on one symbol. So here's my result. So we got some ups and downs, and so this is the kind of baseline result we wanted to show. Now, what is this multi-condition group? So multi-condition group we have here. So we can drag that over to an entry or an exit. So now within this multi-condition group, and let me shrink down this one here to give us a little more room. We can now put in 2 or more other conditions. So maybe we say we want to exit when the consecutive up is above 2, maybe when indicator compared to indicator. maybe when a short moving average is above a longer moving average, and then maybe another indicator compared to value. Let's see, maybe when the RSI is above like an overbought level, let's say 60, just for this example. So now we have three conditions in here that are in this multi-condition group. So we can say, I want this to resolve to true if one of these three is true, or if two of these three, or maybe all three. So let's say two of them. So if two of these three is true, then it's going to exit the position. So if I run it, we should have a different result here. So yeah, we actually do have a different result. We have a higher result. So if we go to we now improved it a little bit. So if we look at our positions, let's see, do we get any information about the exit signal?
Could get it.
No, it doesn't tell us which of the three conditions. That could be something we might want to add here. We can, maybe have it, add to the signal name, like which of the three caused it to exit. So let's see. 20. I'm trying to find one where maybe it's obvious that
It's obvious that it didn't do what you wanted to do.
No, maybe trying to find one that, so like this one. So this one here, it didn't have two consecutive up days. So this was a down day, right? This was an up day. So that's one up day, but yet it still exited here. And that's because the RSI was above 60. So it used this, condition. And the moving average, the 20 was above the 50. So it took those two conditions. And so since two of the three were true, then it exited the position. So that's the multi-condition group in a nutshell.
And it's always and, right?
Sorry?
It's always and. This condition and the next.
If it's two.
Or?
Well, in this case, it's, the way we have it set up here, it's two of the three are true.
Right.
So you could also say,
so it's and. Two are and, right? One and another.
Right.
Yes. But if you set it to one, then it's just one of the three is true.
Now, if you want to do or, so you could just delete that whole multi-condition group, and you could just put in two different conditions: indicator compared to indicator, or indicator compared to value. So actually, this would be an and. So if the two conditions are within one block, so they're anded together, what you could do though is you can put in another cell. So we put in another cell at market and then another condition. So each of these cell blocks is treated independently. So both of these cells would apply to this buy. So this is how you would kind of do the or. So either this cell or this cell would need to happen in order to sell the position. So in this way, you could do like an and, or an or.
Yeah, cool. Thank you.
Yep.
I think that's, I didn't even know about that feature, but it's another example of how beautiful design it is, and all the varieties you can use and test without even being a programmer or even have to know how to program it. So it's just an amazing feature, just like the evolver or many other things.
Yeah, so, for WealthLab 7, I really wanted to make this building block, whole experience much more flexible than what we had in WealthLab 6. In WealthLab 6, we had, many more rules that were all, much more specific. But now, this is geared toward a fewer number of rules, but then with those, you can really do all kinds of flexible things, especially when you get into these qualifiers down here too. We can maybe talk about that another time, but that gives you even more flexibility. So yeah, what do you think, Volker? We're like about over an hour.
Yeah, we're yeah, well, just about an hour, but some of us started early, but yeah, I think we covered a lot. We went.
Can I ask a 10-second question?
Yeah.
I tried, based on what we saw last time, strategy evolver. Is there an end to it? I mean, mine keeps running and running and running, and
there's no end. Yeah,
there's no end.
Just whenever you want to stop it.
And then sometimes I see very nice data, and then it disappears.
Well, that's because there's a filter. So if you open the evolver, you'll see that there's a filter here, the evolver filter. And if you read the help, it tells you,
I know it's in the strategy optimizer, right? Where you put the filter.
Right. So it's going to apply this filter. So, it could be that you had like a really good strategy, but it maybe had too many NSF positions or something like that. So it excluded it.
So could we make this an item for next meeting?
Yeah.
Where, how to use in practice Evolver? Because, I mean, it's like you can't stay glued on the screen, right? At least the way I use it, I would have to stay glued. So I'm doing something wrong. What is the practical use of Evolver? Just to come up with a list of 10 new good ideas.
And it could also maybe lead to a new kind of feature to let it automatically stop if it reaches a certain threshold.
I thought you added something, Dion, in the latest version. No, was there?
Nothing like what we're talking about.
Oh,
but yeah, let's talk about that next time.
Okay, cool. Thank you.
Yeah,
very helpful today.
Good.
Great, gentlemen. Thanks a lot. Thanks for joining, and hope to see you again. And I think we'll make it the topic next week. We call it Evolver. So you can see some fantastic things happening because this Evolver just runs through every crazy idea that you basically feed it with. So
yeah, and I'll also try to put together that days to cover indicator.
That'd be cool. I wonder how much you pay for that on Bloomberg. Because on Tom the Mark indicators, you pay a lot of money for. Anyone here has Bloomberg data? No? No. Good. Anyway, it was great. It was great to have you here. Thanks a lot, everybody.
All right. Thank you so much, Volker and John.
Bye, everyone.
Bye.
Thanks. Bye. Bye.